Since the 2011 revolution, Egypt has understandably been a tough market, not least for investment banks. But things seem to be changing now. I'm joined by Ahmed El-Guindy, Head of Investment Banking for EFG Hermes, the largest standalone investment bank in the country. So Ahmed, you worked on the IPO of Arab Cement in May, which was the first initial public offerings since the revolution. Is this a sign that investors are regaining confidence in the country despite the political turmoil?
I guess you're absolutely correct. Things are starting to change. I guess the repatriation of foreign funds was the main issue that got resolved in March. After that, I guess we've seen a very strong demand and appetite for the Arabian Cement IPO, as you correctly said, especially on the institutional tranche that got almost covered from US, South Africa, and UK. So I would say, yes, institutional demand is back on track.
And shall we expect more interest in the country? Are we going to see more deals coming through the pipeline in Egypt?
Definitely, I would say if it wasn't for the time needed for the preparations of the IPO, would have seen a lot more this year. But hopefully, I mean, within the next 6 to 12 months, we'll see a number of other good deals as well.
Are we talking still in equity, in the equity markets also?
Yes, in the IPO market.
In the IPO market.
Just align with the global trend. I mean, this year has been, you know, a fantastic year for equities throughout the world. So I would expect Egypt to join the league.
Very good. Where else in the North Africa, Middle East region do you expect to see a nice pipeline of deals coming through?
I guess GCC will also witness a very strong surge in the number of IPOs. I think the ongoing IPO of Emirates Malls Group or EMG will open the door for a few more to come, especially with the upgrade to emerging market status for UAE and Qatar.
Okay, and you're here in London to meet with potential new clients and test the waters. What kind of conversations are you having?
Yes, we're having a number of our clients to meet potential investors, but also more importantly, we have a larger number of already listed companies to meet with investors, and I think this will help us understand, I mean, directions over the next 6 to 12 months, especially for institutional investors based out of the UK and US.
So you remain positive, as you said, about the equity market pipelines. What about M&As?
M&As, I think, also will see a good flow of deals. I think, however, that the deal sizes will not exceed, you know, the $300–400 million, especially in the coming period. So I guess people will be cautiously monitoring the market and will be more happy to conduct those sort of mid-sized deals rather than the mega deals of, you know, $1 or $2 billion.
Thank you very much for your comments.
Pleasure.